By my late 20s, I became a millionaire. Right now, I'm managing a multiple seven-figure investment portfolio with properties all around the world. And the income from my investment portfolio pays for my lifestyle. But here is the thing. Nobody handed me a blueprint for success. There are 20 crucial money lessons I wish I knew in my 20s. These lessons would have saved me years of trial and error, and in this video, I'm going to give them to you. So if you're serious about fast-tracking your financial journey, then pay attention. This video might change everything for you. Before we dive in, make sure you hit the like button. It will really help me with the YouTube algorithm to reach more people. And if you haven't done so yet, make sure to also subscribe to my channel, because I'm going to be posting regular videos and breakdowns like the ones that you're watching right now to help you to get an edge and to fast track your journey. Now, let's dive in. 20 money lessons I wish someone told me in my 20s. The first lesson is that the educational system is rigged against you. So it is your own responsibility to educate yourself. Now, why is this an important lesson? Well, when we grow up, we spend the first, 20 years from around 4 or 5 years old until your early 20s in the educational system. But if you dive deeper into the origins of the educational system, then you realize that actually the educational system was not created with your best interest in mind. The educational system as we know it today was formed by John D. Rockefeller, who is an industrial tycoon. He built a very impressive business empire. And at one point, he started to think, how can I get more workers for my business, for my factories? And he looked at the educational system and he started to fund the educational board to get more influence over the educational curriculum. And his philosophy was that he did not want to create a nation of thinkers. He wanted to create a nation of workers. So what do they teach you in school? They teach you to get a job, to work 40 hours per week for a salary, to get a mortgage, and to pay off debt for the rest of your life. That's basically what they're setting you up to do in the educational system. Look, I'm not saying that a job is bad. Look, jobs can be amazing, but I just want you to become aware that if you really want to become financially free, then you should educate yourself on what it means to be financially free and how you can become financially free and what's the best road to get there. And when I came to this realization, I started to take my own financial education very serious. And I couldn't do this by talking to my parents or listening to my teacher. I had to go and seek people that were actually financially free. The second lesson that I want to share with you is pay the price now so you can pay any price later. I heard this quote somewhere a few years ago and it really resonated with me. At that time, I was at a student fraternity. I was partying every week and I saw that the people around me, those were the ones that were a few years older, they were still stuck in exactly the same spot in life, drinking, partying with their friends, having the same shallow conversations that they're having every single night. And to me, that was not the life that I wanted to live. So after 2 years of being stuck in that scene, I decided that I was going to get out. I started to cancel parties. I was not drinking anymore. I was not partying anymore. I decided that all of those extra hours, all of that extra money, all of that extra time, if I invested in myself, in my own growth, in my own development, then I can achieve a lot more. Of course, I need to sacrifice fun and pleasure on the short term. It's not always fun to read books, to study, to work hard on Friday evenings or Saturday evenings while all of your buddies are having fun. But now, a few years later, I am reaping the rewards. This is delayed gratification. I didn't optimize my life for short-term happiness and fun. I optimized my life for long-term growth and fulfillment. And because I made this sacrifice earlier in my life, now I have the results that I have. I became a millionaire. I've got properties all around the world. I became financially free. My investment portfolio pays for my lifestyle. And all of those friends that I was partying with many years ago now are asking me how I did it. So I hope that they're watching this video right now. And actually, if you do and you know me from those times, then drop a comment below. I'm really curious if you're watching this video. The next lesson that I want to share with you is don't take advice from people that don't have the results that you want to have. So when I embarked on my entrepreneurial journey and many years later on my investing journey, everyone in my environment was skeptical. They said like, oh no, it's never going to work out for you. Just get a job. You're going to lose money with those investments anyways. Just put it in your bank account. And when I looked at those people that were giving me that advice, now in retrospect, those people did not have the results that I wanted to get. I compare this to a bucket of crabs on the floor. I don't know if you've ever heard someone say this analogy before, but if you put a bucket on the floor and you fill it with crabs, you don't even put a lid on the bucket, it's just open. Like every single crab in theory could just climb out of the bucket and escape and live a free life. But what happens in reality is that when one crab starts to climb up the wall of the bucket, the other crabs start to pull him down. And as a result, no single crab starts to escape. And they're all just trapped inside of this bucket. But they have an illusion that they can escape at any point in time. That's also how life is. Society is like a bucket of crabs. When you start to outgrow your group of friends, when you start to outgrow your people that are very close to you, then they will start to almost sabotage you by implanting negative thoughts and advice in your mind that will keep you stuck in the same place as where they are stuck in life as well. It's very uncomfortable for them to see you go to new territories of growth. So if you really want to grow and really want to succeed in life, then you should only seek advice from people that actually have the results that you want to achieve, that have actually walked the path that you want to walk in life. I've spent too much time and energy listening to people that didn't have the results. And the picture that you see here on my screen is, let's say that you want to get a six-pack, all right? Your goal is to get in shape for this summer. Then would you hire a personal trainer that is obese? No, of course not. You would probably find the most shredded personal trainer that has the dream body that you want to get. It's the same with financial advice or business advice. You want to seek someone that has actually gotten those results. And this will help you to weed out and to clear out all of the noise and to help you to really get focused on the path that you need to walk in life. Now, the next lesson is that success leaves clues. What do I mean with this? Well, fortunately, we live in the information age. Right now, we have YouTube, we've got podcasts, we've got books, all at our fingertips. And if you want to learn something, then it's very easy for you to seek out the best person that has achieved those results or the best person in a particular niche or industry, and to acquire all of their knowledge. This won't always come for free. I believe some of the best knowledge I paid for. I think right now I've paid for around $160,000 worth of coaching, mentoring, books, seminars. But this has given me so much in return in terms of knowledge, skills, growth. So if you want to learn something, then find someone that has the results that you want to have and literally reverse engineer what they have done in order to achieve that success. Now we're going to go more into financial territory. Most people are not aware that their money in their bank account is becoming worth less every single day. This is a concept or a phenomenon that we call inflation. So what happens is that governments all around the world are constantly printing money. They're printing trillions to keep their economy afloat. And this happens in the US, in Europe, in Japan, in UK, everywhere. And with every unit of money that gets created, every other unit of money that was already in circulation gets worth less. So if you save money and you hold it in your bank account, then over time that money can get you less products and less services because your purchasing power tends to drop. So you've got two options. Option number one is you accept that your life is becoming more expensive, so you start to work harder in order to compensate for that. But you need to understand that we all have only 24 hours in a day, and if your solution is to work harder, there will be a limit to how much money you can make. And actually, if you start to push those limits, you might actually get a burnout and lose everything. There's also a second solution to this problem, which is learning how to invest your money. Learning how to put your money to work and how to multiply your money, in my opinion, is one of the best skills that everyone should learn, no matter how old you are, no matter where you are in the world, because this is the way to beat inflation and to actually upgrade your lifestyle and to escape the matrix, which is a term that people often use for the system that we're all trapped in. So your money is becoming worthless every single day, and it's time for you to learn how to invest it and to put it to work. Lesson number 6 is you can't save yourself to riches. Imagine, there's all of these YouTube videos out there which are giving you financial advice around in the lines of don't spend your hard-earned money on expensive lattes in Starbucks. But every time you walk past a Starbucks and you don't spend your money on a coffee, does this increase your wealth? No, there's no billionaire that became a billionaire by not spending their money on a coffee. So saving is not going to make you very wealthy. Of course, a euro or dollar or yen not spent is a euro, dollar or yen saved. It's, of course, you don't spend it, so you don't lose that wealth that you've gained, but saving by itself won't make you wealthy. And that ties into the previous point. Even if you save money, so you don't spend your money on this latte at Starbucks, but you hold that $5 in your bank account, then over time it will become worth less. So even in this situation, the system is rigged against you, even if you don't spend your money and you save it. So yet another reason for you to learn how to invest your money. One book that completely changed my life is the book Rich Dad Poor Dad, written by Robert Kiyosaki. In my opinion, this book is the total, absolute Bible must-read for everyone that wants to learn how to become financially free. And in this book, Robert Kiyosaki explains in very simple language so that almost a child of 8 years old can comprehend it. He explains that rich people don't work for money. Money works for them. So the whole philosophy of how rich become rich is they sacrifice a certain period of their life in order to gain an active income by working, by trading their time for money, but they use their excess capital, their excess income to acquire assets. Assets are things that can increase in value, like stocks, bonds, real estate, watches, or that pay a cash flow, like real estate, crypto miners. So you want to invest your money in stuff that either appreciates in value or that pays you a cash flow. And at the same time, you want to limit your liabilities. So liabilities are things that only take money out of your pocket, like cars, your own home, or designer clothes. Like once you spend this money, it will not generate any more. So you should understand that it's time to use your active income to acquire or build assets, because assets are ultimately going to pay for your lifestyle. Lesson number 8 is start investing as early as possible. When I talk to people around me and we talk about investing, they often have objections like, yeah, I'm already too old for me to start to learn how to invest, or I have already missed the boat, I'm too late, or I will start investing when I've made my first million. That is one of the most stupidest objections that you can have towards investing. The most important thing about investing is that you should just start investing as soon as possible, because when you invest and you start to generate returns and then you reinvest those returns, you start to compounding. You start to compound your wealth. That's what we call the compound effect. And Albert Einstein also says that the compound interest is the 8th world wonder. He who understands it earns it, and he who doesn't pays it. So what does Albert Einstein mean with this? If you learn how to invest and you multiply your profits every single year. Then you make more profits with your profits, and that makes even more profits. And at one point, it's like a snowball effect where you roll a small snowball off a snowy hill, and the snowball starts to become bigger and bigger and bigger and bigger as it picks up more snow. And at one point, it has so much momentum that it becomes unstoppable. That's also how your investment portfolio works with compound interest. Now, what does he mean with those who don't understand it will pay it? Well, that refers to inflation, because inflation is like negative compound interest, because every year you lose value due to inflation. So if you don't understand this effect, then you will pay the price. Tying into the objection that people give me about investing, like, yeah, no, I will start investing when I have my first million. Look, if you don't know how to handle a little bit of money, then you will not know how to handle a lot of money. That's why it's better to start early, start small, and build your investing skill as you progress. I often compare this to going to the gym. When you're going to the gym, you don't bench 100 kilos straight away. You first start with 40, then progress to 60 to 80, and as you build more muscle and become more confident, you can do bigger weights. And it's the same with investing. You first start with a smaller amount, you build some confidence, you get your first profits, and you do it with a slightly bigger amount, and over time you start to build your investing muscle. And this is also the reason why 90% of most lottery winners actually go broke within the first 3 years. It's because they suddenly have a few million in their bank account, but they don't know how to handle all of their money. So they have a lot of money, but their mindset is still the mindset of a poor person, though. So they start to spend it on liabilities, on designer clothes, on cars, on whatever, keeping up with the Joneses stuff that just only drains their bank account. So build your investing muscle as soon as possible and do it consistently, just like you need to go to the gym consistently. The next lesson is, if you don't have a game plan for your money, then your money will become part of someone else's game plan. What do I mean with this? There are a lot of really smart people in the financial markets. Some of them are, for example, BlackRock. BlackRock is the company that owns the world. They own all of the big companies on the stock market. They own big percentages. They own the media companies, and they're very clever. They know exactly how to play the markets. They know how to manipulate the markets, how to create fear, how to bring out news articles that causes people to panic sell so that they can buy assets at a really cheap discount. So that's why it's important to disconnect your own investing decisions from what is happening in the media and what is happening in the financial markets. The best thing that you can do is create a document that outlines your investing game plan, that outlines what assets you're going to invest in, at what prices you're going to buy them, how frequently you're going to buy, when you're going to cash them out, and you're going to stick to that document religiously. Because if you're just reacting, then you're doing exactly what other people want you to do. And oftentimes it's not in your favor. But by creating this investing document, you start to become proactive and you start to stick to what is best for your own interest. I hope that you're liking this video so far. If you do, then make sure to hit the like button and drop a comment below letting me know what your best insight is so far and if any of these money lessons resonate with you. Now let's continue. So the 11th money lesson that I want to share with you is that you should forget day trading. Instead, you should invest for the long term. Yeah, social media is full with day traders trying to sell you some kind of lifestyle where they've created a lot of money out of thin air. But if you look at the statistics, then 95% of traders, if it's not 97%, lose money. So why would you pursue something that has almost 100% probability that you'll lose it all? Instead, you can better invest over the long term, meaning that you buy and hold assets over the long term. So why is day trading a losing game? Well, I compare this to the weather forecaster on TV. The weather forecaster can probably predict the weather once correctly, maybe if he's lucky 2 times in a row, 3 times in a row, 4 times, 5 times, but there's never a weather forecaster that can predict the weather 100% of the time accurately. There's no weather forecaster that is 365 days a year consistently right on his predictions many years in a row. There will always be a few days that you're incorrect. And with day traders, oftentimes when they're on a winning streak, their confidence starts to build. They think they're some kind of genius. They start to use leverage, and then they get completely wiped out and lose everything on the next losing bet. Because trust me, those losing days are always in there. And that's why most day traders lose money. They get too greedy. They have too poor risk management. And over time, you are just much better off becoming a long-term investor. Like Warren Buffett, for example. Warren Buffett is a long-term investor. He doesn't speculate on short-term price movements. Yet, he's one of the richest people in the world with a net worth of over $100 billion. Talking about Warren Buffett, here is another rule of Warren Buffett that I religiously follow. You see, most people, when they're investing, they're actually not investors, they're gamblers. They're just throwing their money left and right, hoping that one of their investments would just make them instantly rich overnight. I call this the spray and pray method. But that's not actually how investing works. With investing, you actually do some research on the asset that you're investing in. You're trying to understand what it does, what value it has, what fundamentals are lying underneath it. And the whole goal is you want to make sure that you minimize your risk and you maximize your upside potential. And this comes down to two rules that I've learned from Warren Buffett. If you listen to any of the podcasts, the books written about Warren Buffett is known for his two rules for investing. Number one is never lose money. Number two is never forget rule number one. So when most people are investing, they only think about how much money a particular investment can generate for them. And they don't really care about the returns. If they need to risk losing their money 99% of the time, then it's no problem for them. Even if there's 1% chance that they could become a millionaire, they would do it. Even with a much smaller percent, if you look at the lottery, people are still willing to take that risk. Well, Warren Buffett reverses this. He just thinks about, okay, how can I just not lose money and in the process make a little bit of return? Because if you even get like one big winner, but you lose all of your other investments, then still you are losing over the long term. It's better to think and consider about your risks up front and try to minimize your risks and at the same time slowly and steadily grow your wealth. When I started to adopt this mindset and when I went from a gambler to a real investor adopting these two rules, that's really when my wealth started to grow consistently. Okay. Lesson number 13, only invest with money that you can afford to lose. Too often I see people gambling their life savings away or their college tuition funds or some kind of money that they need on the short term. When you're doing this, then it creates a lot of stress. For example, you're investing in the financial markets or in the crypto market and the market takes a 30% dip, while your child needs to have access to his college fund next year, but you invested all of that money, then you're going to be totally stressed. You're probably going to panic sell, pull all of your money out of the market and take a loss because you're afraid that it's going to drop even further. But when you're investing with money that you cannot lose, for example, money that you don't need in the next few years, then you can sleep very comfortable at night knowing that even if the market drops with 30, 40, 50% on the short term, you don't need that money anyway. So you can be patient to weather the storm and to sit out the market cycle and for you to cash out your money again at a later time where the price is much higher. So don't invest in money that you need on the short term. Look, trust me, really, even if you get presented with an opportunity to double, triple your money, but you need it on the short term, don't do it. The probability is much bigger that the market will drop and that you will be forced to cash out your money at a loss, which might set you in a very unfavorable financial position. So only invest with money that you can afford to lose. When I make an investment, I just assume that I'm not going to touch it in the next at least 4 to 5 years, if not longer. And this also ties into the previous lesson. So lesson number 14, always have an emergency fund that in the worst case, if you lose everything, if you lose your job, if your business goes bankrupt, you still have an emergency fund that can help you to sustain your life for at least 6 to 12 months and can cover all of your expenses. This puts you in a position where you can take a little bit more rest and where it takes a little bit what did I say? To take a little bit more risk. And this takes a little bit of the pressure off you, knowing that even if you fail, you still have a backup system in place. So never completely overextend yourself. I know people that, for example, have no emergency fund, and then the market crashed, and they were forced to sell some of their investments because at the same time of the market crashing, they also lost their job, they quit their business got in trouble, and then they were forced to sell their investments at a loss. You never want to do this, so you should always have your own investment fund, your own emergency fund. Lesson number 15, you do not have to keep up with the Joneses. I've got a lot of friends that are constantly fighting with each other. Who has the most expensive car? Who has the most expensive designer clothes? Who has the most expensive watch? And we call this keeping up with the Joneses and or lifestyle creep. It's very tempting that whenever you make more money, then you start to spend more money on your lifestyle, on your appearance, on travel, on dinners, on designer clothes. When you look at videos of me, I always wear plain, boring black t-shirt, black polo. There's nothing special about my clothes. My clothes are not very expensive, but also I don't care. Whenever I wake up in the morning, I open my closet. I've got like 10 black shirts, 10 white shirts, 10 gray shirts, got 3 pairs of jeans, 3 pairs of chinos. It's very simple, and I don't care about competing with my friends that are, for example, spending more money on designer clothes or more money on houses, cars, etc. I don't care. That is not what gives me the most fulfillment. And I also know that not spending my money on those things gives me extra cash to reinvest in myself, in my business, in my investments, and ultimately that will help me to get ahead way faster in life. And this also is connected to this lesson, the second lesson: pay the price now so you can pay any price later. Sacrifice spending money on designer clothes, on travel, on expensive villas and hotels to reinvest back into your financial growth. And that will really help you to get an advantage in life. Lesson number 16 is learn the difference between good debt and bad debt. Your teachers at school, your parents, your friends might tell you that debt is wrong. Borrowing money is wrong. You don't want to go into debt. But that's actually not true. There's a big difference. You've got, for example, bad debt, credit card debt, which you use to buy your clothes, your car payment maybe, or flights or designer clothes. That's bad debt. That is only money that goes out of your pocket and you don't receive any financial returns for that. But you also have something that's called good debt. Good debt is, for example, mortgages on real estate. I've got properties all around the world, and I have financed many of those properties through bank loans, mortgages. And with those mortgages, I was able to buy properties with a lot lower down payment. And when I have tenants in my properties, they actually pay me my rent, so I can pay that to the bank. I can pay off my debt. And over time, I build up even more wealth. And because I'm using this leverage, I can buy more properties with the same amount of money than I could by just buying the house in cash. So rich get rich because they understand that you can also use good debt. And one of the books that you can read if you want to learn more about this is Why the Rich Are Getting Richer and Why the Poor Are Getting Poorer by Robert Kiyosaki. I talk a lot about Robert Kiyosaki. He has been a person that has made a big impact on my financial development, and I have read all of his materials. And yeah, this is another really great book to learn. Hey, Robert Kiyosaki again. So when I heard a podcast or a video of Robert Kiyosaki many years ago, he said, the rich don't pay taxes. And at that point, I was paying 40-50% taxes in the Netherlands. And I was triggered. I thought, like, I'm paying hundreds of thousands in taxes every year, yet the rich don't pay taxes. How do they do this? Well, this got me on a journey to learn more about the tax system. I decided to make a commitment to myself. I paid around 35,000 euros to accountants, financial advisors, tax advisors to talk about taxes and my accounting and to learn the ways that the rich use to lower their taxes. And actually, when you go deeper and deeper into all of this, you really understand that there are legal and ethical ways to lower and reduce your taxes to almost 0%, but you need to be willing to invest the time, money, and energy to learn how the tax system works. Many People are like, oh yeah, no, the tax system too complicated, and they only complain about taxes. Come on, man. The tax system is created by the people in power, the rich. And they have created loopholes and ways for the rich to ethically and legally lower their tax burden. And it's up to you to learn how that works. And when I started to do that, that's when my wealth building really started to accelerate very rapidly. Lesson number 18, the best investment that you can make is in your own education. I mentioned earlier in this video, I've spent around $160,000 in my own education. I learned from Dan Pena, the $1 trillion man. I went to his castle seminar, dropped 30 grand to spend 1 week with him. It was absolutely worth it. I joined Sam Oven's mastermind a few years ago, spent $36,000. I spent a week with Wim Hof to learn all about meditation, breathing, cold exposure, and I've got many more mentors in my life. And honestly, I come from a background where I have a university education. I have 2 degrees, 2 bachelor degrees, one in international business and administration and one in electronic and electrical engineering. And like 7-8 years ago, I had the perspective like, yeah, I'm a clever guy. I can for sure crack the code myself, and I want to prove to the world that I am smart enough that I could figure out everything myself. And I spent many hours, evenings, weekends being completely frustrated with figuring out business, figuring out investing. And when I started to invest in mentors, coaches, and I just got complete blueprints handed out to me where I could just follow step by step the systems that people have followed to get really great results, then that saved me so much time, money, and energy. And I started to become addicted to this. I always now start to search for shortcuts. Who has the results that I want to get? And can I pay someone to help me to accelerate and fast track towards getting those results? Lesson number 19. That should be a wake-up call. A few years ago, I read this book by Tim Ferriss, The 4-Hour Workweek, completely changed my life. Another book that I highly recommend. And in this book, he explains that in life, there's only 3 resources: time, money, and energy. And in different phases of your life, you will have different combinations of these resources. For example, when you're a young adult, you've got time and energy, but you don't have money. So what you do instead is you trade the best years of your life to earn some money. So you trade your time for money, either through your career, your job, or your business. Then later in life, you have money and energy, but you have no time because you're trading all of your time. And then later, finally, when the promise of society arrives that at 65 years old or 76, whatever age, then suddenly you are old and you've got time and money, but your body is deteriorating. You have low energy levels. Your health is worse. And then you cannot even enjoy the fruits of your labor anymore because you're old, weak, and tired. So to me, this felt like a scam when I heard this. And that was a wake-up call that I wanted to figure out a way to get both time, money, and energy all at the same time. And for me, there was only one solution: learning how to invest my money, learning how to let my money work for me instead of working for money myself. That has been a very big game changer for me, and I hope that now this resonates for you too. And finally, money by itself is not an end destination. Keep this in mind. People set goals for themselves like, yeah, one day I want to become a millionaire and then life will be amazing. No, trust me, the moment you'll get $1 million net worth or €1 million net worth, whatever, nothing is going to change in your life. And probably you're going to realize that making $1 million is nothing. Then you're going to set your standard to making 2 million or 5 million or 10 million. So if you're only focused on making more money, then it's a road without an end. It's a dead end because you're never going to find happiness and fulfillment. Money is just a tool. It's a vehicle to get you to a certain destination. For example, my 3 values in life are adventure, freedom, and growth. And money allows me to get more freedom, financial freedom, location freedom. I can travel the world. I can live in Bali. I can live in Dubai. I can live in wherever I want. I can go on adventures. Last week I purchased a new motorbike. I drove up a volcano. I was so happy. It was an amazing experience. And then number 3, growth. Money gives me the opportunity to invest back into my own personal development, to get coaching from the best mentors, the best coaches, to learn stuff, to go to seminars, to take some risks, to pay some learning money in some cases. And yeah, it's a vehicle, it's not a destination. Please keep this in mind. All right, I hope that you enjoyed watching this video, and I'm just really curious which one of these money lessons resonated the most with you, and which one of these money lessons, yeah, is the best wake-up call for you so far. If you enjoyed watching this video, then hit the like button, and if you want to see more videos like this one, then make sure to subscribe to my channel as well. That being said, peace out and see you in the next one.